James Quincey, President and CEO of Coca-Cola. Thank you for taking the time today. I appreciate it.
Great to be with you again, Brian.
Yeah, so I'm looking over these results. I think you caught Wall Street sleeping a bit. What are they not getting?
Well, I think they're starting to see the story that we've been talking about, which is we've reformed the company. We refranchised and sold off our bottling businesses. We invested in the sparkling business, and now we're investing in a whole series of other categories. And we're starting to see the top line starting to accelerate with a better operating margin. And I think what they're starting to see is that story coming true and turning up in the numbers, taking a lot of work, but we're making great progress.
Do you think they're not getting how much cost you've been able to take out of the system, all that transition to, jettisoning some of those the bottling operations?
Yeah, I mean, to be fair to everyone, it was a very complicated story with a lot of moving pieces. It wasn't that we just sold all the bottlers in one go. We sold them in pieces to try and optimize the geographical map to really make the bottlers as effective as possible. And so that, introduced a lot of noise into the numbers for several years. But we were undertaking the productivity underneath that. We were undertaking the reinvestments. And I think now you're starting to see a cleaner set of numbers, not totally clean yet, but a cleaner set of numbers. And that's what's coming out. The top line growth and the improvement in the operating margin. That's partly the refranchising and partly the productivity.
James, who do you think you're taking market share from? Because I'm looking over these results, and to me, this is a market share story. But who are you taking it from?
Our gains are pretty broad-based. Clearly you have to kind of break it down into the different categories. We're winning in some of the categories like sparkling and juice, where we've got long-standing leadership positions. But we're also doing well in some of the new categories. So our gains are pretty broad-based, not everywhere. It's certainly not a perfect story. There's more for us to do. But we're gaining little bits from a lot of different places.
I have an idea here who you're gaining share from in the sparkling business, but how are you, not exactly high growth, how are you able to drive that market share gain right now?
Look, I think we start with, let's focus on the consumer. Let's really understand what's going on. Who are they? How do they want to drink the beverage? And where do they want to shop? And constantly adapt not just the marketing, but the packaging and pricing offer. We've had a lot of focus in the last couple of years in driving smaller packages, getting a lot of growth. Transactions are growing faster than volume. And that's really resonating with the consumer. So I think we're able to take the brand strength and the big distribution system and refine the packages we're putting out there and really engage the consumers in a different way. And that's helping us gain share, even in the sparkling category where we've already got a pretty good position.
How hard is it to push that type of change through a Coca-Cola who's done things a certain way for so long, to come out and put a commercial on the Olympics where you're showcasing all the brands? How hard has it been to drive that change?
Look, this has been an evolutionary process. Clearly part of what we're doing to drive change is to drive down the empowerment closer to the local operations. Obviously, when we were much bigger and we owned the bottling, we had more degrees of control from the head office. But this new, slimmer Coca-Cola, more asset light, more focused on the brands, we've been able to devolve more of the empowerment out to the field so they can make the choices on, what ad do we need to put on the air for the Olympics in the US this time, and talk about the whole portfolio that we've got and a lot of the community work that we're doing here in the US. So I think part of it is pushing out the responsibility to those people in each of the countries who are really the closest to what's going on with their consumers.
I have to get your thoughts, since we last talked, on the Dr. Pepper Keurig deal. Is that the future? Is that type of vertical deal where the beverage industry is going?
I think, look, the beverage industry is characterized by actually both effects at the moment. There is consolidation going on, but there's also a lot of innovation and a lot of new entrants. And that's probably why it's one of the most exciting, if not the fastest growing category within consumer products. There's a lot of action happening in beverages. But I think what we've got to do and what we focus on is, if we stay close to the consumer, understand where they're shopping, and yes, we've got to adapt to the changing landscape of competition and customers, but we've got to focus on our game plan. We've got to focus on our game plan, and it's a winning game plan, and we've been driving it, and we see a path forward to faster revenue growth and continue our winning streak going forward. And I think that's what will pay dividends for the Coke shareholders.
Do you feel a little bit of pressure just given all the deal activity to go out and do something? I'm not even asking if you want a snacks brand, because I think you get asked that a lot, but just to bulk up further in the beverage space. I know you have that stake in Monster still, for example.
Yeah, look, obviously we don't comment on deals we haven't made, but I mean, you can look at what we've been doing over the last few years. We've certainly been favoring bolt-on acquisitions that allow us to find new innovative ideas and brands and expand them to many more countries, or provide them with the capital to grow really quickly, whether that's through our venturing emerging brands division here in the US or elsewhere in the world, where we've put together small acquisitions in different countries and created a new platform. That's certainly one of the reasons we got to juice leadership around the world. So we'll continue to see more of that. In the end, deals have to make strategic sense. They have to make financial sense. And of course, it takes two to tango. It's opportunistic in some sense. But our track record is using bolt-on M&A to help add more to our platforms and help us continue to win.
Taking a step back from the quarter, you're almost coming up on your 1-year mark as CEO, I believe in May. I'm not too sure where time has gone. What has been your defining moment, you think, as you look back over the past couple months?
I think in a way, it's part of a journey that the company's been on. We spent a number of years, really focused on getting refranchising done, some productivity, reinvesting in our sparkling brands, particularly Coca-Cola. And then a year ago, it's 10 months now, but it's almost the year, we kind of said, okay, now's the time to move past refranchising, to focus on becoming a total beverage company, to get the numbers working, to kind of, we'd suffered a lot in the currency headwinds the last few years, to get a floor on our dollar EPS earnings and start to see that growing. And I think, at the 1-year mark, we'll be able to say, look, we've taken the next step in evolution. We kind of achieved exactly what we said we would do almost a year ago. And we're now ready for the next stage of growth in 2018, more top-line growth and more margin expansion by giving consumers the drinks they want.
From a leadership perspective, how do you inject your desire to move faster and quicker and innovative? How do you inject that quickly throughout a company the size of a Coca-Cola?
Well, I mean, clearly, any institution that's been successful or for 130 years and has grown large is a challenge. But what we've tried to do is say, look, okay, now that we've sold the bottling companies, we can reshape the company. So organizational structure clearly is part of it. Getting the units organized so they can focus close to the marketplace, close to the local consumers, and then driving the culture. The culture has to be clear. We've got to win in the marketplace with the consumers. The head office needs to take on specific roles around leadership and governance and some support to the field. And the field needs to be accountable, empowered, but also accountable for being fast and adapting. So really make changes on the structure and reinforce the culture and underline it by investing in the talent.
Sure. Also since we last talked, there's been a little bit of a transition at Berkshire Hathaway. Berkshire, Warren Buffett, your largest shareholder. Curious, what leadership lessons has he instilled in you as we maybe look to him stepping aside? What have you learned from him?
I think literally he's written several books on leadership and investing, and I think they're always very pragmatic, common sense, grounded in the fundamentals of business and life and economics, and I think they're very profound. I don't think there's one that I would say that's the one for me, because I actually think leadership and management is not a one variable equation. It takes a toolbox to get it done, and so I think there's a lot of inspiration there from what Warren has done as an investor. And let's remember, he also ran some of these companies at different times, and some of those leadership statements are also very powerful.
Sure. And lastly on this, what does the next 5 years look like for Coca-Cola?
I think, the next 5 years are going to be some of our best 5 years. We've made all those changes over the last number of years to reset ourselves as a consumer-driven, asset-light company. And we're going to be driving top-line growth. So I think it's going to be a very good period for the Coca-Cola Company, for its partners, the bottlers, for the employees, and ultimately for the shareholders too.
Well, good luck on your journey, James Quincey. Thanks for taking the time. And hey, don't be a stranger.
Thanks. Good to see you again.